Okay there, guys. Welcome, traders. Welcome to Bretton's Wednesdays midweek webinar. And my name is Kenny Simon, with you every Mondays, Wednesdays, and Fridays as part of Bretton's package, whereby we conduct the webinars on a weekly basis. So it's about 3 times a week at this moment of time, but I see that we might be increasing it for different parts of the world as well. And this is the website of Bretton.institute for those who have not, who are new to this website as well. And this is where we conduct our mentorship. And we are seeing that the possibility of having the geometric patterns course to be launched by next week. So it should actually be up and running by this weekend. So I have already done most of the videos, and I'm just going to be uploading them over the weekend and going through them and adding a little bit more videos to make it really educational, really effective as well for your practical application. So by early or mid next week, I think you will have all the videos as well. We'll send you relevant links to know where you can actually access all the videos as well if you are a member here at Bretton.institute. Okay, so talking about the market as of midweek, the middle of the week, so far we have seen loads of movements. We've got some liquidity momentum as well for various pairs. I've shared GBP and ZD yesterday. It went quite well, not too bad at all. We've got a couple of areas to actually highlight to you as well. We've got an ABCD geometric bullish ABCD pattern for the GBP and ZD, and we will follow through that. We want to look at what's happening with gold. I want to highlight the patterns that's available for gold, for oil traders as well. What are we supposed to be doing in this middle of the week? What are we expecting as well? But I think the highlight for today would actually be the USD as well as gold's impact, the impact on gold from what has actually happened in the States especially. So let's get going into understanding what has actually stirred up the market and given us opportunities for the past 24 hours. That's the most important thing, even though we are looking at the midweek, but we want to look at what is happening or what has happened the past 24 hours. So one of the biggest thing that has impacted the market is the impact on the US dollar to the upside, mainly with regards to the Moderna pharmaceutical company that basically gave a lot of optimism today and late yesterday as well, to actually give optimism to the market that it can battle the vaccination produced by the Moderna company can actually battle the Delta variant of virus from India. So that has actually shot the US dollar upwards, and also because there's a lot of politics within this vaccination thing with regards to stock market shareholders and all that. So they have linked that with shareholders of pharmaceutical companies, especially like Moderna and the other ones that we know better of. So this is basically what has actually gone on. So I have seen loads of, as you can see here as well on the daily FX, it has been highlighted as well. Gold prices fall as Moderna vaccine optimism strengthens the US dollar. So we want to look at that headline, and then I've researched that headline deeper, and I have also combined that with the technical analysis. So the technical analysis side of it, when you draw patterns or you draw your lines, you look to the left, you look to the right for psychological levels and various other things that you do onto the technical chart, is just to confirm what has actually happened in the market that could fuel the market either to the upside or downside. So the fuel is always the fundamental side of it that actually can prolong the trend. But the most important thing as well is to plan your exit. Not the entries, of course, you will plan the entries, but the exit is the most important one. Okay, so we want to look at that. in the chart, and so that you can actually then understand how technical analysis could help you actually measure your area of entries and exits, where exactly. It's like the window to the market. You plan onto the map where you want to go, how far it is, and all that. And that is what the functionality of the technical analysis is, to actually contain your area of movement, your journey, so that you have targets as well. So you can see it as a bird's eye view of where you are traveling as well, whether you're traveling up north to the upside bullish market, traveling down, or whether or not it's better to actually not move up, not move down, and because it is actually on a sideways market. All that is like a map to you, and that is what the technical analysis or the technical chart is actually for. So, but you need to combine that always. So I see lots of opportunities. We want to get to the chart and plan that, but I always want you to slow down your jump into the technical chart. That is why I always talk a little bit more to actually test your patience and also your discipline, because there is almost no reason to actually think in the back of your head that you need to rush to go into the technical chart, because you will miss out opportunities. There is no such thing. There is actually such thing as FOMO, FOMO, which stands for fear of missing out. And that is actually a very, very powerful factor that can actually, cut down your consistency, make you lose more, and actually make you trade a lot more, which basically means over trading, over analysis as well sometimes. So all this is a factor of fear of missing out. So that's why I want you guys to learn and practice slowing down. Slowing down doesn't mean that you slow down and don't go onto the chart at all and take your time. No, it doesn't mean that. It means that what do you do outside of your chart is very, very important. What do you know outside of the chart? So that is very, very important. So here, for example, what we know outside of the chart is some very big news. And one of the biggest one is got to do with Moderna, as I've mentioned. So it has pulled gold prices down because the USD has actually gone up. So in looking at that, we want to make sure, roughly looking at your heat map as well, whether or not what is happening to all the USD crosses as well. Is USD overall on all the USD crosses seems to be positive. If it is, then we can look at the trend strength and then pick out all the what do you call that, crosses. Because how you pick, what you pick today is also very important. What do you pick every day? What do you pick in terms of currency pairs, matching it with the big boys creating all this news and all this momentum, as well as the movements, the liquidity in the market. So we want to ride on, is it good to actually trade gold today? Yes, mainly because of the Moderna news that is impacting the USD. So is it good to actually trade USD crosses? Yes, it's good. So you see the direction of where are we going in order to pick the currency pairs has to actually follow news in a way, because the news created by the big boys, and the big boys are the ones creating the trends in the market and everything else. Because why we want the trends that are created by the big boys, by the big news, is because these big impacts can then prolong the trend. So if you've got a trend that is longer, can last longer, having a marathon of a trend, then you are in a safer environment and location of your trade, so that you don't actually get stopped out easily. And even though you have a stop loss, your stop loss could actually be much broader as well. So you've got a bigger stop loss level, mainly because of the strength of the trend. So the strength of the trend protects you actually from your stop loss being hit. Why your stop loss gets hit like really fast and really quick without you expecting it is mainly because of the distance between your entry and your stop loss is just too narrow. Whether it is narrow or can be broader actually depends on how well you pick the pair and how well you understand the trend of the day. Okay, so this is it. So now, for example, with Moderna vaccine optimism, it is pushing the dollar up. But how far does the dollar go up? Does actually depend on all the other positive news that may make US dollar really strong. So if it does make US dollar really strong, then you've got a marathon of a trend. Then you've got a marathon of a trend for gold as well. So then we know we've got a long way to go for selling gold, long way to go to actually buy US crosses as well. So with this Moderna vaccine optimism, we see that the June FOMC and various other things that has happened the last couple of days, even from last week, has actually been generally positive for the dollar. Of course, we've got some negative news and stuff like that, but then now with this Moderna vaccine optimism, the investors and traders are also focusing on the FOMC talks and various others that has actually been quite positive as well. So the policy and all that quite positive. And today is Wednesday, and Wednesday is a great day to actually look at the ADP results as well. Not to see the results really, statistically, but just to look at whether or not the ADP is usually the preliminary, what do you call that, auto type release of the employment data, like the NFP, but it is actually the auto version. It's more like a tool that can actually give you a bit of indication what might happen on Friday this week. So what's happening on this Friday is this big NFP, okay, for the month of July. So this is first Friday of the month of July, and we're expecting the NFP on Friday. And now the market is gearing towards more and more optimism, as I can see. So the sentiment's quite positive on the dollar, on the US in general, but we want more fuel. So if the fuel is added on from what is going to happen with the ADP result being positive again, then we are very likely going to be expecting more and more rise of the US dollar. So we will see lots of jump and big movements to the upside during NFP, before NFP, during NFP, or on Friday itself. And then we will see and expect much more fall of the gold. So here, what does it actually mean in terms of sentiments? It's a risk on sentiment. Risk on sentiment, a lot of buying, a lot of selling of the safe havens like the Japanese yen, safe haven like CHF, and also gold predominantly. But now we want to look at gold a lot. I would love to pick gold as what I would like to trade from today as well because of the USD. So I would like to also trade USD crosses, which basically means major pairs. A lot of things are going on in the fundamental side of it, the economic side of it as well today. So here, for example, on Thursday, today's Wednesday, as I've mentioned, on Monday, we have got a very long docket of data releases on today, which is Wednesday the 30th already. So here, for example, we can see that you have Chinese data right there. Now, Chinese data usually, if it's manufacturing especially, has got some impact to the Australian dollar and New Zealand dollar. Okay, so you want to see that as well, look at that. But most importantly, we have got here the gross domestic GDP for GBP has actually been negative here. It's got this negative 1.6, so it's actually lower by one percentage point or something like that, or even more compared to what is expected. So that should actually fuel the GBP to the downside, because we've been trading the GBP to the downside, right? So with GBP, a couple of other GBP pairs as well, I think other experts are talking about all these other patterns that are sort of signaling GBP's continuation to the downside. But if we combine GBP with USD, we have got more fuel for selling the GBP, mainly because of the strength of the USD. So we want to also look at different GBP crosses differently because they're combined with different currency. So here, for example, we have got the Euro consumer price index, really important as well. So we know that the Euro will be moved a lot together with the USD, of course, as well as the GBP again here, and also the Australian dollar, New Zealand dollar as well, because of the Chinese data. Here, this is where we see the ADP employment. If you guys want to know a little bit more, just click onto it, whether it is on the FX Street, Forex Factory, you always have a little bit of explanation of what it is. So the ADP non-farm payroll, it's a private sector job report, is set to show fewer gains in June. So it's telling you, giving you already a little bit of hint right there. The employment change released by the automatic data processing. So this one here is automated, okay? And is a measure of the change in the number of employed people in the US. So non-farm payroll means that, you know, they're evaluating all the, you know, the salaries and the employment of people out of the farm, okay? So not the gardens and the farmers and all that. Okay, so generally speaking, a rise in the indicator has positive implications. So we don't know about the direction because there's always a trick right there, but we know that it is going to be moving the market quite a lot, okay? But it's also an indicator roughly of further positivity or negativity of the US dollar, and that actually then, you know, links up with gold as well. So there you go. This is basically it. Just want to take a look at that. Now, before we jump onto the chart and find opportunities today, I just want to always very quickly look at top movers, the heat map in general. Let's look at the heat map first, right here. For those using the early warning signal as well, you guys can do that. I do that as well, but with my other laptop, this because that other laptop has actually all the credentials protected to it. So that's why I have to use this laptop for my presentation. So that's why you don't see me using that. But I have also identified the same thing with the USD picking up as well, and also some safe havens going on the downside. So here, for example, like CHF, it's building up to the downside. That means more selling of the CHF. But JPY seems to have more interest because here most of it are weaker than JPY as you see here. But you want to go onto the USD and you can see roughly that the dark blues are picking up, right? So you have got more blues as well, column by column, except for the JPY. Okay, so we still have JPY as a preferred safe haven at this time, but then not CHF. Okay, so they have preference of which safe haven it is going to be. But here, for example, because of the nature of the news with the Moderna and then the policies in the States with its how you call that, inflation scenario, then you want to always combine that with gold. You want to look at opportunities with USD crosses and gold. That's the most important thing. Okay, so here we have got quite clear and nice actually table for the JPY. So JPY, as I see it in the early warning as well, seem to actually pick up on the JPY quite a lot. So that is on certain pairs as well. You can see that the bars is going to the green side. And here, for example, you have got GBP, CHF, it's already showing, strength against GBP and against the CHF. They're quite well starting for the 4-hour chart. So it's an indication that JPY overall is strong. So may as well not pick USD JPY. We know USD is strong. We know JPY is strong. So we don't combine the USD JPY. So it's not a good pair to look at, okay, when we look at two simultaneously going in the same direction. No, that's not a good way of picking a pair. Okay, JPY very clear. Okay, I just want to have a bit of an outlook, and then also we can go to action bias, and after that we'll just go to the top 10 table. Okay, So here we have got CHF JPY. You can see that the weakness is quite strong on the CHF to the downside, and others are not really very clear, but we've got one that is the only one that's consecutive to the downside from the 1 hour chart right up to the daily chart. You got three arrows in three columns out of four. Starting from the 1 hour chart is your CHF JPY. So I want to take a look as well at CHF JPY because we have seen CHF really weak, JPY really strong. So perhaps something to look at there at CHF JPY as well. Okay. All right, good. So now we know we've got crosses, we've got gold to USD crosses, gold as well to look at. And also let's look at the top 10 movers. You know, what are the interest as of today, roughly, just as a general guideline. So here on the daily chart right here, we can see that NZD, yes, but CHF, a lot of CHF selling. And I think CHF JPY is also on the list of top 10 right here. So the top three, NZD CHF, CAD CHF, AUD CHF. So we've got four in a row, all involve CHF. So we need to actually pay attention to CHF crosses as well to look at CHF versus which currency would actually be very volatile today. Also, we want to look at JPY, which currency can we combine JPY with to create a lot of volatility, USD as well, and also CHF. So here, and we see that there's some clarity in terms of trend with four dots right here on AUD USD. So I want to pay attention to AUD USD as well. So I want to also look at AUD as a currency, single currency, which other currency it is most volatile, so that we can sort of have a little bit of focus on which currency pair will be good, so that we don't just go one by one onto the chart. Okay, so here, and yeah, that's basically it. That's very quickly last point on the volatility chart. Okay, and here on the volatility chart, we look at, let's start with USD on the 4 hour plus the daily chart. Now here you can see as of today on the daily chart, based on the daily chart, which basically means 4 hour to the daily chart, we can see USD is thought to be very volatile against many pairs, which is really good. So you can combine, or we need to analyze further the USD versus the NZD, okay, the USD versus the AUD, right? The AUD, sorry, the USD versus the CHF, okay. There you go, because all this WAP thing, it's quite close to NZD, AUD, this purple shaded area. So the closer it is to which other currency means it's very volatile against that currency. So CHF. So we've got selected NZD, AUD, and CHF against the USD. So we want to combine these pairs, look at, because they've got volatility, which is good, but do we have clarity? That's why we go onto the chart to look at clarity of trend as well, and whether we can plan ahead. Okay, so that's the way we do it with USD. Now we look into, we've got USD, JPY as well. JPY strength is really picking up on a big time, but its volatility of the JPY is against, again, it's the commodity currencies that we can see, especially NZD and AUD. So when I put in here the JPY, I want to look at its pairing with the NZD. Okay, and then we have got AUD right here, perhaps CHF again. So can look at that, because that's CHF JPY is quite interesting to look at. Okay, and we will look at USD already, CHF, now CHF itself. So CHF here, and you can see that immediately it's got a very clear volatility spike with the USD. So when I put in CHF right here, I just want to also look at its link to the USD. So USD CHF, but it's part of the major pairs anyway. So that's good. Okay. All right. Now, last but not least is the AUD. It's worth to look at AUD as well because of the Chinese data release. And as you can see, the spike confirms that it's very volatile, the AUD with the USD. So what's important when you're picking the right pair as well is not only volatility. After you pick the volatile ones, you pick the ones that are really focused by the traders and investors in the top 10 and all that, you then go onto the chart and then you actually look at whether or not these volatile pairs are actually clear in terms of trend. If they are clear on trend, they are high in volatility, boom, it's a good pair to actually look at. Okay, so that's the way that is best to actually select your pair for today to trade, especially. Okay, now let's get to the chart right now. Okay, so with the chart, let's look at the first pair first, Euro USD. And it's the most traded pair. Of course, we want to pay attention to that. Also, because today is a good day to pay attention to USD crosses. So USD crosses meaning the major pairs category. Okay, so we've got about 6 or 7 of them, all the ones that are paired with the USD in there. So if you don't have USD in there, they're called crosses or minors, and majors are the ones that are paired with the USD. Okay, so here we have drawn all these zones, this buying and selling zone, excuse me, and this is giving us all the clarity of how it has actually moved the Euro USD on a daily chart. This is on the daily chart. So we see that prices at the moment, it's trading at 1.1900. Okay, so it's already entering the selling zone for the euro. So this does actually confirm the strength of the dollar because we are experiencing downward movement and pressure of the euro at this moment of time. So it is still in within this bearish candle right here. We have got this bearish candle ending at the closing price at 1860. So 1860 could actually be your take profit. If you are considering selling, you can actually start selling from now on, mainly because prices is actually already in within the zone. But then I just want to find a limit in the take profit at 1860, not further down, not too much as well. So that could give us a potential of around about, not much, still good, about 40 pips or so. So if you're actually selling right now, you're taking advantage of the strength of the US dollar. There is a potential. It's just that in shorter time frame, like now we're looking at the 4-hour chart, it just got a little bit of sideways. Candles are not very confident at this moment of time, mainly because the market has not moved too much before the London Open. So I think usually, the Euro USD would be moving a lot more with the London Open. So it's a little bit early, not too early, but then it's just consolidating a little bit before the final pull of the price down, I would guess. But be aware that it is trading very close to the 1900 psychological number. So what needs to happen is for it to actually come under the 1900. So 1890 could actually be your selling price. It's probably a better, even if you want to sell right now, you can actually sell at any moment of time inside the red zone or inside the blue zone. In the blue zone, you can buy at any moment of time. If it's a blue zone that I have highlighted and say that it is a buying zone, you can buy anytime. But of course, if you are looking at the chart at this moment of time, and you have not placed the order as yet, you can still adjust the price, even though it's inside the zone, to make it a little bit better, ideal price to sell. So at this moment of time, I wouldn't actually buy or sell without tweaking it based on psychological numbers. It has actually saved me a lot and a lot of other traders as well to actually find your ideal selling and buying price always tweaked in accordance to the psychological numbers. So here, for example, it needs to be 10 pips under the 1.1900 psychological number. So your better price to sell will actually be at 1.1890. So if you're selling 1.1890, then your take profit could actually be at 1.1860. Okay, so that is 30 pips sort of a potential right there. We want to take it slow. We don't want to get overly excited with the weakness of the euro, because we don't know that whether or not this whole rest of the week from today onwards will really have the euro very, very weak against the dollar. We know USD is picking up on its strength, but we don't have enough fuel from the euro side. Hopefully after today's news on the euro and all that, then we know what is the positioning of the euro's trend versus the USD's trend. What if they are in parallel, both are strong? Then we know that it's not an ideal pair to trade too much on. Okay, so that all depends on what happens. If there's a lot of negativity in the eurozone as of today, and loads of news, data releases negative and all that, pulling down the euro a lot more lower, and then the USD, let's say today's ADP and everything else is getting more and more positive, that's pushing up, fueling the USD on the fundamental side to the upside, and fueling euro to the downside on its own fundamental side, then we have got a very nice pair, okay, to actually consider. And then we look at all the technical side of it, and then we look for patterns and everything else, that just to polish that trend analysis, or that analysis even better. Now here, in my opinion, what I can actually see is, from a patterns perspective, not geometric pattern, but a general pattern perspective, there may be a formation of and when I see a big fall like this, and then I see a potential cup-like pattern like that, this is mainly a continuation pattern, which basically means it will continue from previous trend. What was the previous trend? Previous trend is downward move. So if it's a downward move and then it builds like this right here, like a cup thing, and it can actually go down to the mouth of the cup, then I see that it might correct a little bit, okay, and then it will actually go down a lot more. So maybe, just maybe, there could be more downward pressure. It all depends on the fuel. What is the fuel? Fuel is the fundamental analysis. So the fundamental side of it, if today has got a lot of negativity, then it might actually come here down to the 18, maybe the 1800 area, or anywhere close to the mouth of the cup here, might find support at 1.1850s area, 1850s. So my prediction is that it may actually come down to the 1850s almost area, okay, and then it will go back up to at least 50% of this cup and handle, because it needs to build the handle of the cup. So the 50, so it will go back to the 1910 area roughly. It'll come down here, go back up here a little bit as a corrective move, okay, and then I think it will then proceed to go down even more like this. Okay, so how do we know whether or not it's got a lot of bearish power underneath? Is to look to the left, and you can see you have got bearish power. Lower the euro USD gets, the more bearish power it has as well. Even if I go to the monthly chart, you can see very clearly that in this area right here, you can see that you've got loads of bearish power. The lower it goes, the more bearish, powerful mother candles are there. Okay, so we don't see bullish mother candles, we see bearish mother candles. So that does actually tell me that there is a possibility, if it does fall, it'll fall even more. But right now, on the short term, we see this from the 4-hour chart, because when you look at the 4-hour chart, you're actually literally looking at 1 hour to 4 hour, that kind of time frame. So it's actually quite short. Okay, it's not even medium term, it's actually short term. when you're looking at 1 hour to 4 hours. So the 4 hour is actually your 1 hour in a way. Okay. So anything that happened between 1 hour and 4 hour, that's what it means when you look at your 4 hour chart. So here it's as I've mentioned, that is the opportunity right there for selling the euro. But at this moment of time, not a good price. So the price that I'm giving it to you right now is 1.1890 is your sell price. You can do a pending order at 1.1890, and then you want to take profit at one or exit at 1.1860. So that's about 30 pips or so. Okay, that you can do your pending order on the Euro USD. All right. So now, as we look at the Euro USD, there's so many other major pairs that we can look at, combining it with the USD. I've got the USD CAD here. Now, the USD CAD, it's not very, I'm not really keen into it, mainly because it's not very clear in terms of the trend at this moment of time, because we have the USD presumably on the upside, but it's not showing the upside. So it does actually communicate strength in the CAD as well. So I don't like to look at a pair that both is actually on the same side. Okay, I want one that is giving me a marathon of a downtrend and then the other one on uptrend and vice versa. I want an opposite. That will create the opportunity even better for you, because it will create a safer environment to trade when you know that two is total opposite in terms of its direction. Okay. Okay, so here, let's look at other major pairs. Let's look at AUD USD, then we'll proceed to USD JPY as well. Now, this is a daily chart. We can see that the three lines, they're not really very confident, but then we want to look at the current candle. What is actually happening now with the mother candles and various others. Now, it is trading, AUD USD is trading at 75.20 exactly on a psychological number. So it's not ideal for a buy or a sell anyway. But what I can see here is it has respected a bit of a support area right here, right on to the 50 moving average. So looking at how it has actually moved overall, this is on a weekly chart, it's got sort of a bullish momentum to the upside on the AUD. So it's again a little bit confusing, right? Because we are expecting the USD to shoot up, but then we see that the AUD as well is looking like it's picking up. But let's look at the 1 hour chart, look at the way it is actually traveling at this moment of time under all the three lines as well, but then it's picking up. You can see that it's picking up right here. We go on to the left, there are some bullish candle a little bit higher. So I would guess that if it proceeds to go higher, then it's got momentum to push up. But let's also compare that to the 4 hour. Now the 4 hour is a different picture to the 1 hour chart, which is a little bit confusing, right? Maybe not. It's got downward pressure, AUD, 4 hours still downward pressure. So yes, it is actually giving us a little bit of a downward type movement, but there may be some correction due, because it is number one, trading at the psychological level where it could reverse at any moment of time. Now, if it reverses to the upside, it may be backed up by these mother candles, bullish mother candle right here. So I would think that it has some space, some room to go up to at least, let me just change this one here. Referring to the mother candle right here, I think it may have a little bit of a potential to go up to the 75, I think almost 75.50 area. So whatever you do, 75.35 to 75.40, you need to exit your buy trade. So here, so I have drawn this horizontal rate line based on the closing price of this mother candle, closing price of that next month candle. So we see that this may be the resistant area right there from 75.36 area to 75.40. So they're all very close, I think closer to the 75.50 psychological level. So let's look at whether or not it finds resistance. What I would prefer to do is to ascertain the trend of AUD USD, meaning that to leave it to go up first and find resistance right here. If it finds resistance and on its way down, then we can actually sell it or think of entering it as a sell, because then it would confirm the USD strength and then the AUD weakness to the downside. Okay, so at this moment of time, not to plan the buy. I mean, for me personally, if you guys want to, then there is a bit of a room until this area, obviously, and that's about 10 to 16, 10 to 15 pips or so. But I find it not really, it's not worth to stress yourself out on a very small trade. It's probably better for us to look at the bigger picture and the bigger move. The bigger picture, bigger move potentially is to the downside. So we wait until it goes up and find resistance, and on its way down, then we ride that trend to go down a little bit more. Okay, so that would probably be better. And when it does actually come down a little bit more, I see the potential of an ABCD, the geometric bearish ABCD pattern to the downside. So if I take the Fibonacci A point from here and I go down all the way down here, then I see that it's got a potential that is a C point. But if I want to adjust the C point, I adjust the A point to look at a better C point perhaps. It's hanging in between. Let's see. There's no nice A point. So I'll just settle for this this one here. And let's say if you take that as your A all the way to the B, and then we take the B to C, perhaps I'll just take this one here as well. It's okay, just so that it becomes a bigger pattern. No, I changed my mind. Let's use this one here. It doesn't really matter, as you can see, because as long as you confirm that the C point is minimum of 38.2%, then you can carry on with your drawing of the pattern. Okay, so here itself, I want to look at the centroid area. So the centroid area has already passed central area to the downside. That's a good thing. Then we may have a potential of it reaching around that area right there, 73.70, close to the 73.80, 73.80 area. But if you look at that there, the D point of coming down all the way to the D point, we can go onto the daily chart also and see whether or not you've got support exactly at the D point. And then when you look to the left, exactly on the D point, you've got a support. Exactly on the D point as well, you've got previous resistance. Previous resistance became support, and then now it wants to become support again, potentially. The only concern I have is whether or not this gap down here has got bearish candle. And the answer to that is yes, it does have some bearish candle right there. Actually, not too bad at all. We've got some strong ones there, some good movements to the downside there as well. So yes, we do have some momentum. So that's good news. And we've got further, the further back you look at, you've got more falls in that gap by a single bearish mother candle. So that's good news. So here I see a potential selling type movement for the AUD USD, but not just yet. Just wait a little bit more and you'll have loads of opportunities to sell in stages and have many exit points, TPs to the downside. So I would wait for it to actually come lower under the 0.7510 would actually be ideal. But for those who can actually wait a little bit more, perhaps under this B point would actually be much better, but that is 74.70 onwards to actually start selling. But for those who wants to start selling early, yes, you can, but be careful because we don't have nice bearish zone yet that we have highlighted there. We have got one here, right here, but it ends at the B point. So yes, you guys can actually sell from 75.10 for AUD USD 75.10. So 0.7510 is your selling price, and you can exit at 74.90 or yeah, 74.90. So that's not too much right there. You've got about 40 pips, right? Slightly less than 40 pips, maybe about 35 to 38 pips or something like this here for the sell. So right now, as you can see, it is correcting. So maybe it might correct up to this area right here, 75.50s area, and then come down. On the way down, for me, if I were to take this trade, I would wait until it goes up first, starts to find resistance at 75.50 area, and then I will take that sell area and exit at 74.90. Okay. All right, so that's AUD USD, guys. Okay, now shall we take a look at USD JPY? Not a good pair, both are on the upside. CHF USD CHF, perhaps we can take a look at that as one of the major pairs. Let's check. GBP and ZD. Yes, we can take a look, but we would like to always look at pairs that are pointing out to us that we can trade them because of the big boys are paying a lot of attention to them. Then we can look at the other currencies as well. GBP and ZD was good for the time at the beginning of the week because it pointed out quite well. But for today, for example, we've got extra pairs that could actually be very good to trade, and they are the major pairs like the ones that we've gone through, Euro USD, AUD USD as well. Let's take a look very quickly before we go on to the GBP pairs as well. Okay, we will look at GBP USD as well because we want to go through the major pairs for today, because today is major pairs kind of environment at this moment of time. Okay, so we'll look at GBP and ZD for sure. Let's go to USD CHF first, because that's really the key as well to look at, mainly because of CHF giving us a lot of hints. GBP and ZD, we'll take a look because we've already got because some of you guys have already entered. I've entered as well. We're floating at this moment of time. So we need to troubleshoot this trade and look at what we need to do, whether or not we leave it and stuff like that, right? So that's for GBP and ZD. So GBP AUD, let me replace this with USD CHF. Okay, so let's take a look at, because sometimes what happens is that when you are already in a trade and it's floating and you need to hedge, let's say, or repair your trades, it does not mean you need to repair that exact trade, like let's say the GBP and ZD, but you can actually repair your trade also with added trades. So if you trade the pairs that are really strongly trending today, it could offset the losses while waiting for your existing trade to come back to the direction that you are thinking of. You can add on to fresh trades, but fresh trades based on very strong trend. Then these ones could actually happen within the day, your intraday trade, to give you some profits that can offset the losses for your existing trade. Okay, so that's why it's really important to have some fresh trades as well, but you need to pick the pairs correctly to have that nice fresh pairs to help you cushion your risk of your existing losses at this moment of time. Okay, so this is important. So now here, this is daily chart. Now we can see that the USD CHF has got room to the upside. It is actually picking up quite well right there. This is the daily chart. On the weekly chart, we know that it has actually passed this bullish candle right here, but it's got some more bullish movement. So here, if we look at this mother candle right here, It's got some move to the upside. Another 100 pips up is potential for the USD CHF, you see. But what I would like is to look at this area here as a resistance and also support. So it's at 92.33. So what I would then plan is for it to actually go to the 92.60 area and plan my support there as my entry price to buy the USD CHF at 92.60, which is 10 pips above the psychological level. I'll color this blue as well. Give me a second. There we go. So 92.60 you can actually buy and then reach out to 93.10. So that would give you some pips right there. But to be on the safe side, I think I want to see what's happening to this level here as well. That's too low. Okay. Okay. So there is an area right here, but it's not really that big. So 92.60, 92.90. There is a potential, a little bit risky, but you can actually set a buy order depending on USD picking up. I think USD is picking up quite well, and I see a lot of optimism in the market as well. So we're just waiting for the ADP as well. But a pending order at 92.60 can actually happen. Just to look at this potential area buy, but I wouldn't look at too much buying. But if you are taking small risk, for example, and it's only 30 pips potential, right? So 0.9260 you buy, pending order buy, and then you take profit at 0.9290. So you got 30 pips right there. Then maybe you want to only risk your stop loss at say 60 pips, because that's 30, you double it up. So 60 pips or so, and you can trade at $1 per pip. So you know that no matter what happens here, you lose only $60. Okay, but then if you will make that extra $30. So an extra $30 traded at $1 per pip for USD CHF, let's say, and then you have got another extra 30 pips from a potential on AUD USD and a potential on Euro USD, for example. So when everything kicks on, at least you have got three pairs to offset a little bit of risk. So out of three pairs, you can make potentially 30, 30, 30. That's 90, right? So if you don't make 90, you make at least 60. So that 60 pips extra would actually be offsetting some risk for your existing trade. So that's basically how you can actually trade with fresh pairs added onto your existing trades, but not big movements, not big expectation like 50 pips, 100 pips, take profit. No, because you need to understand, when you expect the number of pips, you need to know how much you need to risk. What's your risk appetite going to be? Okay, based on what you want to achieve. If you want to achieve 100 pips, so you want to make a profit of 100 pips, are you willing to lose 200 pips? Because you need to double up that as your stop loss, right? So this is very important. And then you need to think about what is the per pip value as well. All right. Okay, there you go. So here as well on the USD CHF, we can see A here, B here, C here, and then D potentially. So if I see this as my A point, and I go up here, it's quite nice, not too bad. Here is close to the 78.6 area for my C point. So here we look at stretching this one out, A to B, and then doing this, and we can see that it's got a potential of reaching out to this level at 96. But this is based on a weekly chart, by the way. Okay, so that is. So let me. Yes. Yeah, give me a second, okay? Give me a second. I'm actually working at the moment. I'm having a live session. Can I come back? Thank you. Okay, right. So some people came to, the landlord came to introduce me to some cleaners. Sorry about that. Okay, so here we have the potential of it reaching there. This is the potential ABCD here on the USD CHF. So that's just a rough idea right there. Okay, I'm just going to draw the pattern, finish the pattern right there. Okay, there we go. And we can see that the centroid area is exactly at where the current price is at 92.11. So there you go. Okay, so that's for USD CHF. And let's now take a look at the GBP pairs. GBP USD very quickly, because it's one of the major pairs, we can see that it has entered the sell zone, and I think it's got further room to actually go under the 3830. But I think as it goes lower to 3820 and below, then we can actually sell the GBP USD even more. And that's because of the USD strength. If the USD strength actually picks up and at the same time it goes lower than 3820, then you can actually start selling at 3810. Okay, so 1.3810 for GBP USD can actually be a potential selling area. And also, if we look at it, we have got various bearish candle that give us an indication that we can actually look at the take profit area as well. So 3830, 3820, that's a little bit too. I would think we will leave it until it goes a little bit lower to actually look at other mother candles and attack it from there. So at this moment of time, maybe leave out the GBP USD first, but there are some, the way I look at it, it's surrounded by lots of bearishness and bearish mother candles as well to the lower side. Okay, so that is for the GBP USD. Now, let's go to GBP NZD. Now, what are we doing with GBP NZD? GBP NZD in terms of price action, it is still within the bullish zone. We're seeing it correcting, yes, coming back and forth, but traders need to remember this is a very volatile pair, so the correction can be quite wild, okay, because this is one of the most volatile pair as well, like the GBP, like the GBP JPY, the GBP NZD, the GBP GBP AUD as well. They are all very, very volatile, but GBP NZD compared to GBP AUD seem to be even more volatile. Okay, so yes, you can see that this is happening, and it may actually make your heart beat a little bit faster, thinking whether or not it's a correction, change of trend, don't know what exactly to actually do. But with GBP NZD, if you have planned your trade in accordance to the 30 pips, you shouldn't actually worry. Okay, so if you've got 30 pips, and by now you should actually hit your stop loss, and you hit your stop loss only at 50 or 60 pips, and you made a loss, then you are actually safer and you have not entered the trade. But if you have your stop loss stretched quite long, then it might actually be very, very challenging. Okay, so you want to be very, very careful. So hence the reason when I have trade signals and trade ideas like this, I will always encourage the 30 pips or so. It depends individual trader to trader. Okay, some traders I have spoken to, they need to have that discipline of about 30 pips or so in order to pick up the pace to reach the break-even point of their own personal account and stuff like that. So we have got a one-to-one type mentorship going on with various other traders on a case-to-case basis, right? But then most importantly is, let's say we're looking at it generically on GBP NZD on the daily chart. If we go onto the weekly chart or the monthly chart, you can see the big picture right here. Okay, so you can see that this whole blue zone basically is made up of that very bullish mother candle right there. So that bullish mother candle went up, came down. So from there, it has been a downward move, and then one up move right there, and then down move right here. And this one went up, didn't go exactly there. So, and then it went down. Now it's on its way up again. So the way up would actually be on all these areas of resistance as well, which I have marked it with the red exit price. So I've marked all these red lines based on resistant areas, but then I've tweaked it based on psychological numbers as well. So all these red areas here are your exit areas. Okay, so if you are already in a trade, now this is where I want to explain it a little bit better. Okay, we are usually, in my way of trading and the way that I would suggest, is just a one-way traffic. That means we are going upwards. Okay, we are buying, but we are not rebuying at the same area. Usually we don't do that. We just wait for the next move up, and then we enter, and then we go on and on and on. And we don't actually sell. We don't actually do anything else apart from the plan. Now, right now it's trading at 9761. Let's go to a short-term time frame like the 1 hour chart. Okay, now as you go to the 1 hour chart, you can actually see it's quite obvious that it's finding support here exactly at these 50 and 100 EMA, and it's actually building up. It's already built up the price from 1.9750 area. It's going upwards. So it's trading at 1.97, 9750 area. Now it's at 9760 and above. So it has respected this area of support, which was previously the resistance right here. Okay, so previous resistance became a support, and we see a potential of it to the upside. Now, as we go on to the 4 hour chart to look at whether or not it has more fuel. Now, it came down here with a longer wick to the downside. When it has a longer wick to the downside, it's giving you hints that it's beginning to feel exhausted to go down more. That's why you got the longer wick to the downside. Now, this one here is previous resistance, could potentially become support right here. Now, as we go on to the left, we can see that we've got a support candle up, another support candle, mother candle, and some more support mother candle. So these three are giving us hints that there is still room to the upside. It's just correcting at this moment of time. I would think that it has room to the upside. Now, as it goes upwards, and as your negative, what do you call that? Your losses become less and less and become more positive, then you would actually be hitting your take profit area right here, right at 9810. That's one of the red line. Now, after you have hit that one there, in order for you to aim at that, you need to exit this one here, and then you re-enter at 9830, right? Because your next psychological level is 9820. So you want to enter at 9830, right? So when you enter at 9830 right here, okay, right? So you enter yourself. You can enter anytime as well, but then I prefer to have a good plan of entry as well using psychological numbers. So your psychological numbers are for entries and exit. If you enter that way, then you know that you are entering at 9830, exiting at 9890 as your second entry. Okay, after you've closed these trades right here, right? So I know that 9830, 9890 is 30 pips potential. So maybe I limit my stop loss at 70 only. Then I trade at $1 per pip, let's say. So that is a $1 or $2, depending on yourself, depending on your equity level as well, and depending on the amount that you are having the appetite to risk, because you want to double up, because this is a very volatile pair as well. So you cannot afford to have stop loss at only 30 pips, right? So you have to be either double or triple, depending on your risk appetite and your equity level at stake as well, right? And also, the numbers of trades that you have left open as well. It will impact your equity level. So you want to be very careful with knowing exactly. But this is a sort of safer approach to actually trade this way, whereby you've got limit, you know that you're riding potentially a good trend to the upside. Maybe you've got hundreds of pips potential in that blue zone, but we may not be able to take exactly that few hundred pips, but we can actually ride on it, but we want to ride it safely. We want to take little steps, little stages. So the 30 pips, 30 pips, 30 pips. So other traders who have large equity, they would just leave it and they will trade maybe 5 lots, 3 lots, 10 lots, depending on their risk appetite and their equity level. If the equity level is 500,000 real money, 1 million, whatever, then they can afford to actually leave it and not actually trade like us, trade in stages. 30 pips and all that. They'll just leave it and they'll just ride along. All this will mean a lot of floating for them, and then they will rise up again. And that's basically the risk that they are willing to take. So they've calculated their risk already. But for us, retail trader at this stage, and depending on a case-to-case basis with traders, it depends on your objective. If your objective and your mission or vision for this moment of time is to get back up to your break-even point, or to get back up to a good steady level of profit, then you have to trade like this. You have to trade like this to build the momentum and build your capital up. And once you build your capital up, then you can actually change a bit of your strategy, and then having a bigger take profit type, what do you call that? Space or gap, and then your stop loss as well will actually be increasing. So your risk appetite and then your objective, your target profit level as well will go up. So that's basically the way to do it. But for now, with GBP and ZD, as far as I can see, it has got all these potential more to the upside, but it's correcting at this moment of time. Why? Because there's just various reasons. I mean, we cannot monitor all the reasons why it does what it's doing, but technically it is showing the possibility of finding the support right here. The good thing as well is that we have got all this consolidation area right here. And if it finds support at this area right here, which is it's doing the same thing right there, it has the probability of more space or bias to the upside. So yes, it's correcting, but this is a very, very volatile pair as well. So that's why it's maybe making us a little bit nervous, not knowing whether or not, boom, it will come down even more and stuff. We never know. But if you are planning to have your stop loss at 70 pips, you know you will lose 70 pips, then you should actually be fine, because then your amount of money will be reserved for your next move and your next pair as well. So then you can actually cover that up. But if you don't have stop loss at this stage, it is very dangerous, because it might even hinder you or become an obstacle to actually go and trade when the time comes with another pair, or when the time comes with this particular pair as well. Okay, so let's look at RSI. Now, with this RSI right here, if I draw the trend line, it's hinting the downward move right here. It is actually to the downside correcting, but in my opinion, it is just very close to a support as well, because you got it caught up with all these EMA lines as well. And the daily chart is showing, quite good. It's above all the three lines, found support right there. Price is way above the support here, which is safe, which is good. Now, from the current price now to the borders right here is 100 plus pips. So if it were to fall, it'll fall 100 pips down, if it were to fall that much, and come down here and still find support at this area. right here. It's difficult a little bit to actually come down and go all the way down here because it's just too much support. This zone, this is a support zone right here, and then it brought further support at the buying zone. So it is a support zone. This is a buying zone. We are still in the buying zone at this moment of time. Okay. As you can see, even on the weekly chart, it just shows really strong right there. On the monthly chart, you can see that as well. It's upside right here. It's got a bit of a wick there, but it shows the potential right there with other candles as well. Candles. That's a long one there. Within this one here, we are now still inside here. Eventually, on the long term, it will have loads of falling pressure, of course. But at this moment of time, up to the weekly chart, monthly chart shows many, many, many months to come. And that shows there is a potential to the downside. But all the rest of the time frame is showing us upside move. But in any case, you shouldn't be overly panicking, mainly if you are ready to lose about 70 pips and you are trading with the right amount of per pip value that you have personally chosen, then you should expect that this could actually hit your stop loss. Let's say that it could hit, but if it does hit it, then it hit at your 70 pips that you yourself have planned. But if you don't have stop loss, then I would worry for you. But if you have your stop loss, take it as part of the loss for today, but then it is easily you can cover it easily if you plan it rightly with your other pairs as well as of today. Okay, so that's basically it. Any other questions, guys, before we end the session for today? GBP JPY is showing quite clear signs of falling. So I think it has the potential to fall to this area here at 152.00 area. So that I think GBP JPY, I'm expecting it to fall another 50 plus pips or so to the downside. So there is money to be made there for the sell. I think here it's already reached 152.70. So you can take profit at 152.10. So here maybe I will just make a small one here, 152.10 to sell. And I will adjust and put my stop loss as well. 152.70, 152.10 there for GBP JPY on the sell side. And here, if we look into average directional movement index, we can see it's picking up as well above 25 in terms of its strength. And the other time frames as well. Okay, we've got questions. Yes, let's take a look at gold, Tiruvan. That's a good idea. Okay, let's take a look at gold. All right, now gold, very interestingly, it's got a pennant type pattern. A pennant pattern is basically like the triangle pattern, but it's usually shaped like this, the triangle, when there is a big fall or a big rise down. This one is a bearish pennant pattern right here on the daily chart, as well as the other charts you can find it. This is signaling more downward type movement. Okay, so this is signaling continuation. So a pennant pattern is usually a signal to continuation of the trend. So that was a downtrend right there, corrected a little bit. So it will continue the downward type movement most probably. And also if we look to the left a little bit, you can see that after it has actually gone down under this area right here, it would probably be mirroring or having this mother candle, bearish mother candle here as a referral point. So in my opinion, I think it could actually fall to this area right here, following this mother candle right here, before it touches the support area of this one here. I think a potential support at the 1740 area. Okay, 1740. So if you're selling from, let's say from 1750, you can actually take profit at 7040. Okay, so let me just 40 for gold. This one here, it's a buy. Okay. So you want to sell 1750. So because there's no psychological levels and stuff like that here for gold. So 1750, you're selling at 1750 because you want it to go a bit lower. Let's say here, right? So 1755 onwards, you can sell, and then 1740, you take profit, just so that you don't, get trapped anyway here. Just something small but reasonable. So 1755, sell, 1740, you are exiting or you take profit level. It's good on gold so far. I don't want to do a lot more analysis for gold, especially for now, mainly because I would like to monitor what would actually happen for the dollar with regards to its policy, regards to the ADP today, with regards to the NFP as well, so that we can then identify a nice marathon to trade from next week onwards as well. Okay, good. So that's basically it. Okay, guys, want to keep it simple as well. And you guys have got some trades there to repair and trades to understand where you're at the moment, as well as what you can actually trade for today and what you can actually analyze. So you can analyze the USD pairs, USD NZD, USD AUD, USD CHF. You can also analyze JPY further, JPY NZD, JPY AUD, JPY against CHF. CHF, USD CHF, will take a look as well more throughout the day, and then AUD USD as well. So there are some pairs to monitor more because the volatility are really high for these pairs as well. And they would actually write along what is going on, what will be going on today in the market from the fundamental data side of it, as well as news. Okay, guys, with that, I think we can end the session, right? If you guys have got no questions, further questions, we'll end the session for today, and we'll see you guys again on Friday's market wrap-up session. Okay, all good, guys. Anything at all, feel free, you can email me as well, or even just, direct message me at any moment of time, or connect with me at all the other social media side of it. Okay, guys, take care. Thank you very much, and have a brilliant day. Bye-bye.